Well, g'day the traders and students right around the world. I wanted to give you a quick update on some individual stocks which are really breaking down as at this week, or as at the end of trading, which of course is Tuesday afternoon. Let's just go through some of our top 13 individual trade lists which we cover each and every weekend. First of all, what I'd like to speak about is Amazon. Amazon today has broken down below that $300.21 bearish entry. As you can see, if I just zoom in on the detail and bring up my pen drawing tool, you can see right here that we had a very nice Morobozu shaved long day candlestick. You can see the increasing volume, or the sell volume, come in on this particular trade. Very nice type of move which we have expected. The first target really which I'm paying attention to is down here at about $289.40 as at Amazon. If we get anywhere close to that target, I will be looking to of course exit out of those put positions. Let me just scroll through and have a look at some additional trades. Baidu technically did break down or suffer a pretty interesting breakdown. We are starting to see price move below that 100 simple moving average again. Look at that sell volume start to creep in on the downside of Baidu. Have been very neutral at this macro pivot point. You can see right here we have broken out in late October 2014, early November 2014. We've come back down, we've retested this old macro level. I've had a look or studied a lot of these patterns over the years, and generally what happens is the price of a stock generally likes to break above the old resistance or swing high levels once it has the stamina. So I'm really neutral. I was very neutral this week. 234.82 on the bullish side, 222.06 on the downside. We're trading right now at 219.96. So a little bit of a bearish breakdown. We are below the exponential moving averages. We are of course below that 100 simple moving average. We are moving into oversold territory in the oscillating indicators. So keep a close eye on Baidu. If you are in this particular trade, I'd set my stop. Really your 2-day stop would have to go above Monday's trading session, which comes in at about $233. In the event that we get continued downside price action on Baidu, I'd simply drop it to above Tuesday's trading session. Let's speak about Caterpillar. Caterpillar today had a very interesting candlestick. This is what we call a shooting star candlestick. We like to see this at a resistance level. However, this is technically taking place at support. What's interesting to note is that candlesticks actually derive their meaning only in the right location. So people might be sitting here and saying that this one particular candlestick is extremely bearish. I like to sit on the opposite side of that argument and say that the actual buying pressure is starting to show up at the support level, as you can see by this upper week. Although the candlestick in and of itself is still indicating extreme selling pressure, it can also be interpreted as buying pressure during the day. Although the market did tank or was down close to 112 points today, 111.97 on the Dow Jones Industrial Average, Caterpillar was pretty much flat. It was only down 41 cents on a $90 stock, so it's really relative. It didn't really do all that much. If anything, it's saying, look, people are starting to show up at this very reasonable level of support, just above $90 a share. Disney today is looking quite weak again. This is what you call a shooting star. This is at a resistance level. The candlesticks in and of themselves are pretty bearish. We have struggled to take out the swing high established in earlier 2014 or December 2014. This is looking very weak. Had an entry here at 90.25. We don't have blockbuster confirmation below this trade trigger, but if the markets continue to act weak, watch the price of Disney plummet. It's not really a stock which I can give too much information on at the moment. It hasn't actually given us that decisive break. We're very neutral on Disney. FAS continuing the retracement. Facebook today is really flirting with that upper primary trend line. You can see right here, since establishing that gap in July 2013, it's really holding above this support level. Right now, if we zoom in on the detail, we are starting to break, or what appears to be break below it. The good news for Facebook is that there still is short-term support down here, about $72.43. So if this level does fail, about $74.70 a share, this is going to be the first target here at $70.43 per share. Keep a close eye on Facebook. Google today has really been one of the standout stocks for us. We've had 2 entries on it. One was at 517.70. First target was 509.40. The second entry was at 502. Now the 502 was more of a macro break below this old swing low going back to November 2013. Once we start piercing or puncturing these old macro support levels. I'm interested to see whether the base is going to fall out on Google. What I mean by that is it going to be a very, very quick ride down to $487 or even as low as $467 on Google. At the moment, this stock is being dumped. You can see the increasing sell volume. Again, almost a flat Morobozu shaved candlestick to the downside. Just extremely, extremely bearish. We're moving into a stock which is making a series of lower highs, as you can see, and lower lows relative to the trend. This is textbook downside reversal behavior. We're below the exponential moving averages. We are finding them as resistance. So you can see right here, we're bouncing to the downside off from the 10, the 20, and the 50. We're moving into oversold levels. That is fine during the trend. That's what the ADX is supporting. The ADX is saying, yes, I like this bearish trend on Google. And the CCI is very weak. It is below that negative 100 line. It is a fair way below that negative 100 line. It's actually giving us a reading at negative 206.94. Very, very weak reading on Google. Halliburton this week, it hasn't really given us too much price action to work with. We are expecting a small bounce in the price of this stock. This has been an incredible stock lately to trade. We've done or absolutely cleaned up on this particular stock. Most recently, the entry was at $38.48. We are trading at $38.11. It's not, well, it's really not much of a trade to go by. It is slightly profitable, but I do not like the overall price structure of Halliburton. I do believe it needs a correction to the upside, which is ultimately going to give us a new shorting opportunity to the downside. So stay posted on Halliburton. Netflix today is breaking down below $321.90 right here. Again, it's trading at $316.44. So if you wanted to, you could take some profit immediately, maybe cull some of your positions on Netflix. It's interesting to note that a lot of these big tech companies are really leading the way to the downside, the likes of Google, also Amazon, Netflix most recently, Tesla as well, is really giving us some pretty interesting signals as a macro perspective, or at least leaders of the markets, which translate to all three of the US markets. Caterpillar is sure bringing down the Dow Jones Industrial Average, and when we start to reference, of course, S&P companies into it, you can see, I guess, the relative intermarket sort of relationships which are really bringing the markets down. Let's conclude, or really continue, with Starbucks. Starbucks again today has really taken a hammering over the past 2 days. It's traded from roughly 82.48 down to 79.34. We did reluctantly throw in this 79.34 if I had to give you a bearish trade. You can see it's already gone a long way. Expect, pardon me, Starbucks to slow down in this location, maybe stabilize or bounce, set up a bear flag until we get continued downside price action. Tesla today floating with that 198.10 trade trigger. It is very overextended. We just closed out of our Tesla trades for incredible profits down here at $201.10. If we start breaking Tuesday's candlestick, I'd really leave this at least one more day, okay, before we start entering into contingent orders to the downside. I do think we are going to get a hammer candlestick of some sort. What that will do is probably, or it's a good way anyway, a very common way of people getting stuck in whipsaw trades. I don't want to see that happen for you. So the way I'm looking at Tesla at the moment is that I want to give it at least one day. I want to see some additional structure down here, okay, before I start entering or setting up contingent orders to start entering into additional puts on the way down to 183.90. I think on the overall markets that we are expecting a short-term bounce, all right, or at least a support level to actually hold. We've broken through level 1, we're into level 2, we're moving into level 3. Watch for that bounce as the next shorting opportunity. To conclude with, in this Tuesday afternoon market recap, we have Twitter. Twitter's actually just hit $35 again for the second time. If you didn't get out last week, this is your opportunity to get out as at Tuesday, okay? Twitter's been an incredible trade, $37.42 on the downside. We've hit $35. The same really stands for Twitter as per my analysis for Tesla. Let it go for a couple of days if you're not in it. Let it build that lower structure before you start to actively or aggressively trade Twitter to the downside. I do think it needs a couple of days to materialize, okay? So all the best, ladies and gentlemen. Thanks for watching this market update. I'll give you, or do another recording as at the close on Wednesday. All the best, ladies and gentlemen. Goodbye.